It's the hottest ticket in New York.
Tyra!
The fashion event of the winter. Models are primping.
Can you sit or not?
The media swarming.
Video first.
And the place is packed. But it's not Calvin Klein or Versace. It's the Victoria's Secret's fashion show, and everyone who's anyone is there. Donald Trump, Puff Daddy, and Steve Kernkraut. Steve Kernkraut? You may not know him, but he may be one of the most important people in the room, because Kernkraut, a veteran retail analyst with Bear Stearns, follows Intimate Brands, parent company of Victoria's Secret. He's one of the guys who decides whether these shares stay in style with investors. Most of Kernkraut's time isn't spent with runway models. It's spent studying financial models in his office at Bear Stearns.
What goes into a stock analyst's job?
Well, a stock analyst is a misnomer in terms of title. I mean, in a stock analyst, you have an image of somebody with green eye shades that's studying, ledger sheets and a computer sheet. And a stock analyst's job is really to go out there and try to figure out what stock is going to go up and what stock is going to go down in the universe. With Intimate Brands and Limited.
But to make those calls, Kernkraut has to sort through reams of financial data, information that might make an ordinary investor cringe.
Go through the laundry list of the things you're looking at, the numbers you're looking at, to decide whether a stock is a good buy or not.
Okay, I mean, there are a lot of financial measures. You're going to look at the price-earnings ratio of the company. You're going to look at what the gross margins are of the company, what their SG&A rates are.
IBI, 7 for 5,000.
Head-spinning stuff for sure, but crucial to determining a stock's value. For instance, IBI has a price-earnings ratio of 22. That means its stock is trading at 22 times its annual earnings per share. And believe it or not, that's a bargain compared to stocks in the S&P 500, which trade at an average of 26.
If the market is trading at 26 times earnings and your stock, Intimate Brands, is trading at 22 times earnings, your stock is trading at a discount to the overall market.
So it's a good time to get in.
So it's a good time to get in.
For analysts, crunching numbers is crucial, but just as important is a visit to the real world to see how the product is actually selling. And for a retailer like Intimate Brands, that means a trip to the mall.
Why do you come here? What do you see here that's important for you?
Well, I follow Victoria's Secrets. I follow a lot of retailers. You really have to kind of go to the store, see what merchandise is selling, what customers are looking for, whether or not customers are happy, whether or not they're shopping, whether or not merchandise is on sale.
And that's key, because if too many items are on sale, profits will eventually suffer.
Now, this store has merchandise being marked down for Valentine's Day, which is natural because Valentine's Day was a few weeks ago. But virtually nothing else on the store is for sale. Everything is full price selling, which is great. If you're in a branded retailing business, that's what you want to be.
When sizing up a stock like IBI, Kernkraut also looks for intangibles. Things like the company's ability to market itself to investors and consumers. Something they did recently with a print campaign in top business publications and an eye-popping television ad during the Super Bowl. But for Kernkraut, the real blockbuster is the company's website. They broadcast the fashion show on the site and broke all sorts of online attendance records, drawing 1.5 million visitors, a marketer's dream, and also an analyst's.
Any business they do on the internet is going to be very profitable for them. They have the infrastructure, they don't have to create it. And additionally, the profit margins on their bras and underwear and lingeries are spectacular, while the other e-commerce companies have very narrow margins.
Victoria's Secret and IBI are both hoping the website will help convince Kernkraut and the rest of Wall Street's analyst community to give the stock top billing. But according to some observers, that shouldn't be a problem, because analysts are often optimistic with their ratings.
They really believe that the industry they follow is one of the best, or they'd probably be covering another one. And within that industry, why they've selected the companies that they think the best. I did have...
Chuck Hill is research director at Boston-based First Call, a firm that studies almost every analyst report on Wall Street.
There's about 27,000 individual recommendations. I mean, one analyst on one stock. And if we look at that data, why less than 1% are 4s and 5s, sells or strong sells.
Part of the reason for that imbalance, according to Hill, is that some analysts may be concerned about angering company execs who might cut off access to crucial financial data. But in Kernkraut's case, he says the key is to remain objective. And after reviewing everything from profits to pantyhose, Kernkraut makes his call. He gives shares of IBI a buy.
The job is really not to come up with the most accurate and finite answer to a balance sheet item. While that certainly would be nice, the object of the business is to figure out what stock you can make money in.
And for investment pros who can do that, the rewards are more than just a good seat at a lingerie show. In fact, salaries for top analysts can reach $2 million or more. Just the ticket for stock pickers who can predict whether their companies have the legs for the long haul.